Everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In our last recording, we talked about how the market had finally reached that 381 level on the SPY that we've been talking about for a very long time. And as Fibonacci ratios often do, it's acted as resistance for the entire week. We also said that Bitcoin needed a rest following its vertical move, and it's done just that. So where does it go from here? Let's take a look at the charts. At the time of this recording, it is very late on Saturday evening, early Sunday morning, so the futures market is closed. And as a reminder, the markets are closed on Monday in observance of the Martin Luther King Jr. holiday. While I'm at it with reminders, don't forget to hit the like button, or better yet, hit subscribe, and therefore you'll be notified immediately when we post a new video. Thanks, we appreciate it. As I said in the intro, in the last recording, we showed how we hit the 381 level we've been talking about for quite a while. And that level acted as resistance, like a ceiling, all week long. Market continuing to bump its head against that level. Happens a lot. That's why we look at fib levels, because they are important levels of support and resistance. Now on Friday, we dropped down. Now is that because we were moving into a 3-day weekend and people were just squaring positions? Or are we looking at possibly correcting down, testing that 61.8% fib extension level before moving to the 161.8% extension level at 420. Well, speaking of 420, talked about how we were going to look at some places, market rotation, places you might want to move your money with the new administration, a Democrat administration being a bit more liberal. Cannabis is a place you might want to look at. Here's a cannabis ETF, symbol THCX. You got to love that. Take a look at this volume that's been moving into this over the past week. That's institutional type volume moving in there. Now the problem is we're a little bit overbought. So if we take a look at the 10-day moving average, you can see the separation with where the ETF's trading from the 10-day moving average. So maybe it needs to rest a little bit, as we were talking about Bitcoin in the last recording needing to rest. But there are places we'll continue to look at other areas of sector rotation to move for in the year 2021. Taking a look at the dollar. At the last recording, here's where we were. We said it looked like the dollar was going to firm and maybe bounce a little bit, and that's exactly what's happened. We moved to the upside. The wave 4 is now labeled. So the question becomes, how far does that wave 4 correct before the start of the wave 5 to the downside with the dollar? Well, you can see right in this area here, right around 91, there's some resistance. That's not too far away from where we closed at 90.78. So just a few basis points away from some resistance that could hold before the start to the downside. The dollar firming, you would expect that's rough for the metals, and it was. Gold moved to the downside, so did silver on Friday with that bounce that we had in the dollar. There's no Wave 5 patterns currently in gold or silver. Still expect these to move. And here's another reason why I think these are going to move to the upside, but they are going to have a hard time as long as the dollar is staying as firm as it is. But taking a look at interest rates, here's the 10-year. You can see it made a vertical move, and now it's come back a little bit. Is this going to be the correction to the start of the wave 4, or is this also just correcting an overbought condition? Let's go back. There's where we were. Say it with me. No security in any time frame. Gets very far away from the 10-day moving average. So even interest rates were moving to the upside. A little too vertically, needed to rest, and there they did. Came back to the 10-day moving average. So again, the question is this just a pause and rates are going to continue to move to the upside, or are we starting to look at possibly coming down to the wave 4 correction level? Jeffrey Gundlach, known as the Bond King, says that he thinks that the peak is in of interest rates because of Asian demand. Well, we'll wait and see. The Elliott wave pattern is showing currently a wave 3, but we could form that wave 4 at any point in time. Here's the 30-year, very similar story here. Didn't have quite the peak that 10-year did to the upside there, but you can see the 30-year was also just a bit overbought and is starting to form just a little bit of a symmetrical triangle. So maybe some sort of a breakout is imminent in interest rates. Is it breaking to the downside to start the wave 4, or more upside to run? That'll be something that we'll be looking for throughout the trading week next week. Again, as I mentioned in the intro, talked about how Bitcoin needed to rest. Here's where we were in the last recording. There's the 10-day moving average. There's your separation again. Also, this vertical move. Things just don't go straight up forever. And quite often when they go straight up, they come straight back down. Boom. There was the move back to the downside all in one day. We went through and brought it all the way back to the 10-day moving average. And since then, we've gone through some consolidation. Now, taking the moving averages off here, take a look at the pattern that's forming in Bitcoin. Look, you can see the start of a formation of a pretty nice looking symmetrical triangle. Really nice Elliott wave triangle forming there. If we turn the Elliott wave back on, remember we talked about how do expect to see that wave 5 target at 52,000 to be hit in the not too distant future, but we'll see now if we are going to go through and correct down to the wave 4, or we're just consolidating sideways and move to the upside. Elliott, when we looked at triangles, would say that if you have a triangle like this in the wave 3, it's likely to break to the upside. From a trader's perspective, at least has been my experience, when you see a triangle that's forming, it's a real nice symmetrical triangle like that, you have to respect both directions, the upside and the downside. So we'll just let Bitcoin tell us which way it's going to break. Last but not least, taking a look at the VIX, another triangle being formed here. We did have a little bit of a bounce, and you can see here's the triangle that's forming here in the VIX. And boy, wouldn't an upside breakout in the VIX be rough for the markets? Would certainly confirm the start of a corrective move in the markets. But could also break to the downside with the point of the triangle being above 23. Plenty of room coming back all the way down here to this level around 18 that we've talked about for the last several recordings as well. Looking at the Elliott wave pattern, that 69% wave 4 means that that was a disqualified 5-wave pattern. So I leave it off and then superseded by the triangle anyway. So we're going to be seeing a lot of breakouts over the next week. So when the next recording comes, we should have a lot to talk about. Hope you have a good holiday weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.